Welcome back, folks. Greg Silberman for another session of Come Learn with Me. I am your Alternative Investment Chief Investment Officer. So if there's anything you want to hear about stuff that's off the run that you don't come across normally in the investment side of the business, probably find me dabbling in that. Behind me, I've got the Cape of Good Hope. I misspoke in my previous video. That's the Cape of Good Hope, which I believe should be the southernmost point in Africa. So. All right, another article for Come Learn with Me in the uranium series, The Bull Case for Uranium. And we've been doing a few of these and they seem to be building on each other. It's interesting how the psychology builds on each other. Who's that? Okay, I don't know, I'll come back to him later. In the aftermath of the disaster, many countries established a moratorium. What? Okay. We just started in the middle of nowhere. In the aftermath of the disaster, many countries established a moratorium on nuclear energy. The trough in uranium prices was seen at the end of 2016 at $18 a pound, a 75% drawdown from the $71 per pound level pre-Fukushima. For uranium miners, performance was worse, and the bear market lasted even longer, with a trough in March 2020 after a 93% decline for the Global X Uranium ETF. A year ago, an investor could have theoretically bought all the shares in every listed uranium company in the world for under $12 billion. Okay, now we're talking. The road to recovery. Starting in 2017, all uranium mines began to reduce supply as at $18 a pound, most uranium mines were unprofitable. Cameco and Kazatomprom, the two large producers in the world, have eliminated 17.5% of the world's supply. In 2020, the pandemic had significant effects on production. Kazatomprom had to downsize its operations, while Cameco announced the temporary suspension of the world's largest uranium mine. However, it was not the closure of some mining facilities that triggered the start of a bull market for uranium-related equities. Rather, it was the massive inflows into the mining stocks from institutional investors in anticipation of a pickup in demand for physical uranium. Okay, Sprott. There it is. Okay. These flows triggered an acceleration in the bull market from the end of 2020. A trust changed the market. Oh, a trust. Okay. In April 2021, Sprott, a Canada-based global investment manager, took over a Uranium Participation Corporation, and renamed it Sprott Physical Uranium Trust. While the previous trust held a static amount of uranium, the new vehicle takes a very different approach. A mechanism allows Sprott to issue new units each time the trust trades at a premium to its net asset value, NAV. This extra cash can then be used to buy more uranium. This mechanism has created a virtuous circle. Investors who hold uranium buy the trust, pushing the NAV premium up, forcing the trust to buy even more uranium. This drives up prices and attracts more investors to buy the trust, and so on. Didn't I say the virtuous circle a few minutes ago? I may have. At the same time, uranium development companies are raising capital to buy uranium for storage. This is the consequence of drastically reducing the available inventories, with meaningful effects on the price of uranium. While the price was about 28 at the end of March, it exceeded 50 in September, a dramatic increase, although the price remains below the level at which mines can afford to increase production, 60 to 70. Important one to watch. As a result, the market remains undersupplied by 50 million tons, I guess, per year, as the trust and nuclear power stations search for inventory. The case for uranium, or inventory. Governments around the world are increasingly realizing the importance of reliable carbon-free power generation. Nuclear power emits nearly 70 times less carbon dioxide than coal, making it significantly less carbon-intensive than fossil fuels. I thought it emitted zero carbon dioxide. Okay. In the meantime, costs for nuclear power plants tend to be quite low given the minimal amount of material needed to power the plant. Put this in the fact checker, CNN fact checker. In the context, it is not surprising to see some countries hinting that they are reconsidering nuclear developments for the coming decades. In the US, Energy Secretary Jennifer Granholm recently stated nuclear energy is essential to confronting the crises of our lifetime, climate change. At the same time, the energy crisis in Europe has forced politicians and citizens to recognize the inescapable logic of nuclear energy, not least of which is having a gas pipeline from Russia, which can be volatile. Wonder what's happening this weekend, right? Russia and Ukraine. Anyway, in Japan, recently elected Prime Minister Fumio Kishida has stated it is crucial to restart nuclear power plants. Meanwhile, China is planning at least 150 new reactors in the next 15 years, more than the rest of the world has built in the past 35. ESG could be a further tailwind. Indeed, nuclear would probably be qualified as green investment within the framework of the EU's sustainable finance taxonomy. Sorry, my neighbor is blowing his leaves. I'm not really in Cape Town. This could change perception of the sector, as it is possible any investors stay away from uranium for exclusion eligibility reasons. Investors looking for straightforward exposure to physical uranium, the aforementioned trust is probably the only available option. The Sprott Trust currently trades on the Toronto Stock Exchange under the tickers U-UN and UU US dollars. Trust trades at discount or premium to net asset and can be quite volatile. I'm going to put that in the notes because I believe it. I've seen it. All right, guys. If you want to know more about our investment foray into the nuclear patch, come visit us at this URL over there. You can check out some of the stuff that we've been doing, learn more about our program. Hope you enjoyed that. Subscribe and like. Greg Silverman. Take care for now. Out.